over 70% of new freight brokers overspend in their first 90 days. And that early financial bleed, it just makes it nearly impossible to stay in the game long enough to see results. So in this video, I'm going to show you the most affordable path to becoming a freight broker in a way that I've never explained before, what you can skip buying until you're profitable, and how to win over shippers fast. And it's not just some like random theory I kind of just came up with out of the blue. We've seen this play out now firsthand. We have members who used to be drivers, 9-to-5ers, stay-at-home parents, veterans, or like no experience at all, follow these exact steps to build and scale their brokerage right the first time to save on average $2,000 to $4,000 each. Like Andrew, for example, our first member and former driver of 10 years who built a $700,000 brokerage in under his first year, who said a couple of days ago that he only made $1,400 for the day. He's at that point now. And after now moving over 500 loads in his first year. Or Joe, who started as an agent booking 500 loads per month, which is I think 6,000 loads per year, and is now getting set up as a full-time broker to keep 100% of the profit instead of working off commission. So what do Andrew and Joe have in common? Okay, even though they started from totally different places, they didn't blow the budget trying to look big. They built on the right foundation from day one, okay? Think of starting your brokerage like building a house, okay? You wouldn't splurge on fancy furniture or furniture in general before pouring the concrete to the foundation, okay? The concrete slab for your business is your LLC and your EIN, okay? Your LLC, which costs between $50 and $300, depending on the state. It forms your legal business structure. And it's also required by the FMCSA, which is basically the agency that regulates commercial trucking in the US, to get your MC number, which is basically your freight broker ID that lets you legally arrange shipments. The FMCSA wants to make sure there's a real business standing behind every freight transaction that you do. And then you need your EIN number, which is free. You get it from the IRS, which acts like a social security number for your business. It's basically the passport that lets you open like business credit cards or hire agents later and file taxes cleanly. And if you're thinking like, can't I just run on my own social security number for a little bit? Sure, can. If you like skydiving without a parachute. Okay, that was dark. But spend the 5 minutes online and grab the EIN number and then just move on, okay? Next up, open a business checking account. Most banks offer these for free if you keep about $2,000 in there, or they might then just charge you up to $25 a month if you can't quite swing that yet. Why bother? Because keeping every deposit and payment in one place is a lifesaver, trust me, okay? Especially when tax season rolls around. Imagine future you smiling when color coding your business expenses in there instead of sorting through pizza and bar tab receipts. Trust me, even your accountant, even if that's just you for right now, will thank you, okay? All right, next is a small cash flow cushion that can be a nice little fuel tank when you're first starting out. I try to give yourself a buffer of ideally $2,000 to just keep kind of like your wheels turning, no pun intended, by covering a portion of your first few carrier payments. And this lets you offer to pay carriers up to 50% of the load upfront, a huge trust boost when you don't have a credit rating yet. It's not required, but it's highly recommended. It helped me a lot. Carriers don't have much else to go on or trust you with when you're brand new. So this 50% upfront strategy, it grows your carrier pool a lot quicker and only needs to last a couple of months until your credit rating kicks in. So just kind of think of it as like a runway for reputation. Just also pay carriers fast and they'll then answer the phone next time. So if you're running that load again, you can then just call them up and they know you're going to pay them. If you make them chase you, your load will then get buried beneath someone else's on the load board. So that's only half the foundation. Now let's activate your authority so shippers can see you as legit on day one. Your FMCSA application costs $300 and it registers you with the Federal Motor Carrier Safety Administration. And it unlocks your MC number. So basically the badge that every serious shipper checks before they trust you with freight that might be worth more than your car and sometimes your house. Your BOC3, around $40 a year, it assigns legal agents in every state. So let's say a lawsuit originates in Kansas under your business. So instead of the paperwork disappearing into those like cornfields out there, your process agent then ensures that it lands in the right hands. Why? Because legal documents tied to your MC number can't just be sent directly to you. Okay, the FMCSA requires a BOC3, so there's always a verified contact point in each state to handle serious stuff like lawsuits or compliance notices. You don't have any lawsuits against you though if you just go through the exact steps that I'm walking you through right now. Okay, don't worry. Sounds a lot scarier than it actually is. All right, next up is your $75,000 surety bond, which you finance for roughly $1,000 a year depending on credit. Okay, it's different than insurance. We'll talk about that, but that protects carriers. Okay, if your credit's not too great, just expect to pay more than $1,000, but you can add a cosigner to lower that premium. Okay, so this bond, it exists because if you ghost a carrier on a payment, which you won't, because we're going to get you set up with a factoring company to avoid that altogether, they can file against your bond and still get paid. So if you booked a load with the carrier for, let's say, $2,000 and you couldn't pay them for whatever reason, they'd pull $2,000 from your bond, which you'd then, of course, have to eventually pay back. It's the FMCSA's way of just like making sure that you're not just kind of winging it, and no, you're not ever putting up $75,000 in cash. That confuses a lot of people when they first see it, including myself when I first started. But what happens if your first claim hits? Okay, first of all, it's not too common, but when it does, because you're going to be doing so many loads, it's bound to happen. Don't ever worry about it. If you go through the right steps, it's not a big deal. But when it does, insurance is then your airbag. It protects you from financial trouble, and it just keeps the relationship with your shipper intact. And yes, insurance really only kicks in if the carrier you hired has expired or missing coverage. So it's basically your backup plan when their protection fails, which isn't very common. Okay. Contingent cargo, it's the only kind of insurance I'd start with, which is roughly $1,000 annually, and it covers damaged freight if the carrier's policy refuses. One covered mistake preserves a relationship that could feed your kids for a decade. All right, next up is your UCR, the Unified Carrier Registration, which costs around $40 to $60 annually. It's a small toll that kind of shows every state that you're contributing to enforcement programs. So even though you're not driving a truck yourself, you're still part of the freight movement kind of ecosystem. The UCR keeps you compliant with state and federal requirements, and skipping it can delay or jeopardize your active authority status. All right, now let's break it down step by step so you never have to wonder what goes first, okay? First, LLC. Second, submit the FMCSA application, and then wait for the 10-day protest period. It sounds intense, and it's not. This is basically just the window where other carriers or interested parties can object to your authority, okay? It's very rare, but it kind of gives the FMCSA a pause point to just catch any red flags. During this time, file your BOC3 and then secure your bond, okay? The moment the FMCSA flips your authority to active, which usually takes about 2 to 3 weeks from your initial application, pay for the UCR. It takes like 5 minutes online, okay? Tech is where most newbies overspend, so let's kind of slice fat from that muscle. But we need a little bit of fat though, because that's like where all the flavor is. Am I right? Okay. You might be wondering, okay, what is a TMS or a CRM? I've heard of those. I don't know what they are. Do I need those on day one? Okay. Here's the truth. Most people overthink this part. A TMS, by the way, is a transportation management system. It's just kind of a fancy way of saying where you keep track of loads and carriers and shipments. A CRM, which is a customer relationship management tool, is just kind of where you keep track of who you're talking to and who responded, and track what you basically said that made you money, so you can kind of like get that data. But you don't need fancy software to get started, okay? You can build both right now for free inside Excel. Literally just open a spreadsheet, make one tab called shippers, one called carriers, and then use just the filters and drop downs to track where they're located and who you talked to and what the last quote was. And by lunch, you're operational, okay? No full-time team needed, no software payments, just a simple structure for your TMS and your CRM. Upgrade to a real TMS or a CRM only when your prospect list gets like wild and you're actually moving loads, okay? That's when automation becomes like rocket fuel for you. If you do it too early, it's kind of like installing turbochargers on a car that's like still in the garage, okay? Total waste of money. But that'd be kind of cool to show your friends, I'm just saying. Starting this way saves you about $70 a month, and you'll actually understand your own process before outsourcing it to a tool. Okay, so that's what we call leverage. Load boards run at about $150 a month when you first start, and then it just kind of goes up from there, but start at that. These are basically online marketplaces where thousands of carriers go to post their available trucks, and brokers then post their loads that need to be moved. And that's kind of how that matchmaking works. It's so basically how you, as a freight broker, match a shipper's freight with a carrier that can haul it. So pay for it only after a shipper emails you rate details or awards you your first load. Until then, it's like an unused Netflix subscription with like a lot of extra paperwork. So already we're saving $220 a month, okay? Carrier vetting platforms, they protect you against double brokering. Double brokering, it happens when a carrier that you hire turns around and gives your load to someone else to pick up and deliver without your knowledge. This is very common when posting a load to a load board. About 50% of people who reach out to you from load boards are scammers, which is still crazy to me. And that means you don't know who's actually hauling your freight, and neither does your shipper. It's a massive liability, and it's one of the fastest ways to lose trust and money. But you don't need vetting tools until you start moving loads, though. But once you're there, it definitely becomes essential, because that's the level where one shady carrier can just like erase your monthly profit, if not more. And that's another like $100 saved, okay? Bring in our monthly savings now to $320 a month, okay? Getting your first 1,000 leads, by the way, isn't that expensive. With the right strategy, you're looking at a one-time cost of around $100, and that covers like the raw data, emails, company names, phone numbers, from sources that don't charge recurring fees, which is awesome, okay? So from there, it's all about how you can reach out and follow up. All right, now let's keep your bank balance green so your growth never stalls, all right? Factoring is one of the easiest ways to manage cash flow as a new freight broker, okay? Here's how it works. Instead of you waiting 30 days to get paid back by a shipper, the factoring company fronts you most of the money right after the load delivers, usually 95 to 98% of the invoice. When the shipper pays the factoring company the money for the load moved, the factoring company keeps a very, very small percentage as their cut, and there's no upfront fees. They just kind of take a very tiny slice of each load in exchange for faster access to your own revenue. And this lets you pay carriers quickly and stay in good standing, even when your brokerage is brand new. Most factoring companies also offer 30-day pay and quick pay options for your carriers. Quick pay, it just means that they get paid faster, usually within 1 to 2 days, while you still get time from the factoring company to collect from the shipper. But here's the trick. Tell your carriers you're on 30-day pay terms, because every time a carrier accepts that and gets paid on time, it builds your credit history faster with the factoring company, and that gets you better rates and terms down the line. Paperwork done, insurance locked, cash flowing. Let's look professional to the outside world now, okay? Buy a domain and professional email for roughly $6 to $15 a month, okay? An address like matt@freight.com, that doubles reply rates compared to like hotshotlogistics07@hotmail.com. Yes, some people get crazy weird with it. Don't be that guy or gal, okay? Put up then a one-page site for about $100. I've got a guy for this posted in our Discord group. Next, print business cards for $50 in case you ever want to go out to these manufacturers or distributors and suppliers in person. Also, LinkedIn prospecting tools can be very powerful, but if you're not using it every day, watch out. Okay, take that away for now. Prove that daily discipline first with the primary ways that I suggest reaching out to shippers first. And then pay for a tool like this that multiplies it then in the future. There's another $100 a month savings. Bringing our total monthly savings now to $420 a month. No, that specific number was not on purpose. Or was it? Okay, here's all the costs. Screenshot it, create the business, like just do it. right now. But getting legal and looking professional isn't the full game of it, okay? That's just the starting point. You still have to get a shipper to actually trust you with their freight. And this is where most new brokers freeze. They overthink it. They start quoting stuff that they can't cover. You're basically just like shouting into a void, and the void has a gatekeeper named Karen who hasn't checked a voicemail since 2015. So how do you actually build trust with shippers when you're brand new and have 0 loads moved? Well, let me show you. There's one concept that you need to lock in first. It's borrowed trust over bragging. Don't tell shippers how good you'll be. Prove it through action and precision and consistency. Under promise, over deliver. Okay, I'm sure you've heard that before. I call this now the repeatable broker pattern. Here's how it works. Step 1, quote with precision. Most new brokers try to win with lowball pricing. Don't. Just be within like $100 to $200 of the market and explain why you got to that number. Shippers care more about reliable carriers and fewer headaches than they do saving $47. And if they are only based off of cost, fire them. Okay, get rid of them. I've done this dozens of times. Not worth your time. Their service that they're giving their customers is horrible if they run their business like that. If your number makes sense, you sound confident and follow through, that's how they remember you. Step 2, own the follow-up. If they don't respond, great. That's normal. Most of your wins come from 10 plus follow-ups, not your first. Treat quoting like showing up to the gym. Every set, it matters. Track what you said that made you money, okay? Repeat what works. Step 3, add market value. Not just like random, like fluffy, like, hey, how's your day going? Send notes to any shippers that you've talked to or really want to talk to if you have their email, like, hey, heads up, just rates out of Chicago typically jump over the next couple weeks. Let me know if you need help locking in carriers while rates are low. Even if they don't reply, they notice, okay? That tells them that you're tracking trends. You're not just like copy and pasting lane quotes, okay? Also, when you're at that point, make sure you get a CRM that tells you whether or not they open emails or not. Because if you don't know whether or not they've opened emails, you're spending a lot of time writing that might not matter. Step 4, keep it simple, stay consistent. Don't act like a big freight firm with a huge team. Just be real. Hey, it's just me right now, which allows me to make sure that every load gets personal attention. And that lands way better than just pretending you have 20 agents or operations reps, and then having a bunch of volume come through and then not being able to have any bandwidth to cover any of it. All right, so here's the mindset shift. You're not trying to sell them into giving you a load. You're showing them why you're easier to work with than their current broker. And that trust isn't built by getting it perfect. It's built by being the person who follows through every time and then just setting the right expectations up front. And that's how you go from like, all right, who's this, to, hey, can you run this for me right now in less than 30 days? And if you want to know how to land shippers in detail the way that I do, click this bad boy.